And kind of remilitarization in Europe, and I think the calls on capital for these global sovereigns is growing.
That's a cut, 25 basis points as expected, cut 25 basis points as expected. Looking at the median FFR, that is year-end 3.375%, rounds up to 3.4%. That is left unchanged and as expected, but signals one more 25 basis cut next year. Looking at the statement, it does note that the signals rate cut pause by adding extent and timing to describe its approach to additional adjustments to policy rates. And it does note the decision was 9-3, with a vote split of 9-3. Myron favoured 50 basis point cut, while Goolsby and Schmidt voted to hold. I'm just going further through the statement here. It does note the economy has been expanding at a moderate pace. Job gains have slowed and the unemployment rate has edged up. Inflation has moved up from earlier in the year and remains somewhat elevated. And does note attentive to risk on both sides of the dual mandate, and judges that downside risks to employment have risen, and it will begin reserve management purchases of T-bills starting on December 12th. And just a bit further, it does note the first reserve management purchase operation round to buy about $40 billion in Treasury bills, and the initial Treasury bill buying to be elevated for a few months. We're just going through some of the rest of the SEPs now. FFR in 2025 was 3.6%, which is unchanged from the prior and of course in line with the expected. As mentioned, year end for next year, 2026, was also left unchanged at 3.375% as expected. 2027 also remained unchanged at 3.1%. 2028 also left unchanged at 3.1%, with the longer run neutral rate also unchanged at 3%. Just making you aware, in wake of the decision, seen immediate upside in US equities and treasuries, downside in the dollar, likely on the vote split there, which was more dovish than expected. And just looking a bit further into the SEPs here, it does note Fed projections show wide divergence of views for appropriate rate path of rates in 2026 and beyond. Just regarding some of the other metrics, Fed policymakers do see unemployment rate at 4.4% at the end of 2026. Once again, that is in line with the September projections, and that is also slightly beneath the Bloomberg expected of 4.5%. Then looking at the inflation point of view, policymakers do see end 2026 PC inflation at 2.4%. That is beneath the prior 2.6% and also shy of Bloomberg expected of 2.6%. And for the core PCE measure, that is seen at 2.5% by the end of next year. Once again, both beneath the expected and prior 2.6%. And now on the GDP footing, they do see 2.3% GDP growth in 2026. That's lifted somewhat from the 1.8% in September. They do see the longer run growth at 1.8%. That is unchanged from the prior figures. Just a bit further within the statement here, it does note the Fed ends operational limit of standing overnight repo operations.
Order filled. So just recapping the latest Federal Reserve rate decision we just have, they did cut rates by 25 basis points to 3.5 and 3.75% as expected. The vote split, however, that was more dovish than expected with a 9-3 vote, with Uber, Dove, Myron unsurprisingly voting for a 50 basis point reduction. Meanwhile, Goolsby and Schmidt were the only ones to vote for leaving rates unchanged. In terms of that statement, and as mentioned earlier, it did add the words, the extent and timing of additional adjustments looking forward. And in terms of the SEPs, the year-end 2026 SEP was left unchanged to the September one, which indicates just 5 more basis points of reductions next year. Regarding the unemployment rate, for this year that was left unchanged at 4.5%, but for 2026, it was 4.4%, also left unchanged, but was reduced for 2027 to 4.2%, beneath the expected 4.4 and prior 4.3.
Order filled.
And just looking a bit further through the dot plot composition now, just in terms of where we stand, do note that 6 do currently see the year-end 2025 dot plot of 3.875%, which would indicate that 6 voters wanted to hold at this meeting. Of course, did get the 2 that voted to hold in Goulsby and Schmid, but it does suggest we have 4 non-voters who would also hold if they had the right to. And just once again delving into these SCPs slightly deeper level, won't go over it on the squawks, it would be very noisy and pretty hard to understand by me saying it, but just making you aware the 2026 split, that is very divided with no real clear consensus. We have put it on the headline feed, but just making you aware for 2026 and ahead, it is quite divided in the amount of cuts or holds that people do see.
Order filled. Order filled.
And just one to be aware of for big tech names: Meta, Apple, Microsoft, Google, OpenAI, among 13 companies that received a warning letter. Just a bit further on this story, it does note bipartisan attorney generals warn delusional AI chatbot outputs may violate state laws. Just more context, that last headline.
Order filled.
And just on the tariff footing, EU officials do note discussions between US and EU over tougher sanctions on Russia are ongoing. And just making you in just over 5 minutes' time, we're looking out for Fed Chair Powell's post-meeting press conference. We have put a link on the headline feed, so I would point you towards that if you'd like to watch it yourself. But of course, as always, we'll bring you all the important comments over the squawk.
Order filled. Order filled. Order filled. Order filled. Order filled. Order filled.
And making you aware, Fed Chair Powell has just begun his post-meeting press conference. And just initial remarks here from Powell. He does note the outlook for employment inflation has not changed much from the last meeting. We can see that from the SEPs. And just a bit further here from Powell, he does note the purchase of shorter-term Treasury securities is to support effective control of policy rates. And he's just speaking about the lack of data, but he goes, but what they have seen does indicate that economic activity is expanding at a moderate pace. But he does note, in contrast, activity in the housing sector does remain weak. He does note inflation does remain somewhat elevated, and the effects of shutdown should be offset by higher growth next quarter from the reopening. And just speaking on the labour market, does note layoffs and hiring do remain low. But he did note before that, but of course they have not seen the October and November jobs report, which we are due to see next week. And firms' perceptions of hiring difficulty does continue to decline. And Powell, speaking on the September labour market report, which is of course the latest one we have had, said it showed unemployment rate edged up and job gains slowed significantly, and labour demand has clearly softened. And just continue to speak on the labour market here, it does note less dynamic and somewhat softer, and there are downside risks within it. And now speaking on inflation, as mentioned, he does echo that it's somewhat elevated. And just regarding the inflation data, he does note little data on inflation have been released since the October meeting. It's worth noting in the 6 weeks since the Prime meeting, they have continually said it's harder to get a read on inflation given the US government shutdown.
Order filled.
And further on that footing, does note readings on inflation are higher as goods inflation has picked up, and this inflation is continuing for services. Just making you aware as this starts, we are continuing to see a dovish reaction across markets.
Order filled. Order filled. Order filled.
And does note most long-term inflation expectations are consistent with the 2% goal. Does note near-term risk to inflation tilted to the upside and to employment to the downside, and there is no risk-free policy path.
Order filled.
It does note it should be a one-time issue due to the tariff effect. He continues the downside risk of employment having risen, balance of risk has shifted. So with downside risks to employment having risen, balance of risk has just making way. In wake of those latest remarks from Powell, just recapping, well positioned to determine adjustments to policy rate. We have seen a hawkish reaction, with two action in T-notes book falling to intraday low of 112.23 from 112.11, meaning markets also pairing wins. It does say policy projections are subject to uncertainty, not a plan or decision. Usual rhetoric there from Powell. Looking ahead, no precinct pause, meeting basis. On neutral rate, does note rates now in a plausible range of neutral. Rates now in a plausible range of neutral. The committee does judge reserve balances have declined to ample levels.
Order filled.
And pound notes reserve management purchases may remain elevated for a few months to alleviate money market pressures, and thereafter expect purchases to decline. And now speaking on standing repo, does note standing repo operations are a critical tool to ensure Fed funds rate remains in a target range.
Order filled.
And just making we're now into the Q&A section of Pal's
Order
press
filled.
conference. Just asked about the tweak to the language in the statement regarding the extent and timing and whether that means the Fed is now on hold. He does note there has been adjustments since September and echoes what he just said, that it does bring within a broad range of thoughts more usual, and just continue to see a hawkish reaction on that. A bit further from Powell, does the extent and timing data, they're well positioned to wait and see how the economy evolves. Just a bit further from Powell, he does note consumer spending has been resilient. Spending on AI data centers has held up business investments. And just regarding the SEPs, he was asked about them, how they seem quite optimistic. He does note the baseline expectation for next year is for a pickup in growth. Just speaking about the GDP growth forecast, it just said due to the shutdown, you can actually take 0.2% out of 2026 and put it in 2025, so it's actually 1.9% and 2.1%. ahead of the next meeting in January. Powell notes they will get a great deal of data before the January meeting. And just Powell reiterating what he had said earlier in the press conference, saying they cannot wait and see how the economy evolves. And just speaking on the SCPs again, he does say the implication of projections is for higher productivity. And just quickly breaking away from the Fed, President Trump does note effective January 1st, the US will impose a tariff that is phased in over 2 years on all imported Nicaraguan goods not subject to existing trade agreement. Just worth noting some of their main exports are around ag, such as coffee. And he does note that back to Powell, my apologies, that their two goals are a bit in tension and everyone at the table agrees inflation is too high and all agree labour market has softened and there is further risks. And the degree of difference between committee members is the difference of how you rate those risks. And just regarding the discussions of a clearly split committee, he does note discussions have had a thoughtful perspective and people do have strong views and they come together and reach a place where they can make a decision. Powell notes fairly broad support for today's decision. Of course, we did know that with the 9-3 vote split. And regarding the effects of rate cuts, he said so far they're only beginning to come in. Does note though regarding data they'll need to be careful to assess household survey data. And just speaking specifically about the household survey data here, he does know, given the technical nature and how some of it is collected, it may be distorted. And that's because some of the data was not collected in October and half of November. and so I need to look at data with a skeptical eye. And just speaking on inflation, for CPI, they understand it may be distorted by technical factors. And just moving away from Fed to geopolitics, according to Bloomberg, Ukraine sent a revised peace plan to Washington as Trump held a call with European leaders. And Powell does note he could make the case for either side. It's a close call. That is regarding the rate decision. He could make the case for either side. It is a close call. And does note one tool can't do two things at once, and it is a challenging situation. And just reiterates, he thinks they're in a good place to wait and see how the economy revolves. And Powell notes he does not think a rate hike is anyone's base case. He's not hearing that. But he does note some people feel they should stop here and wait. That is seen from the SEPs earlier. Whereas some people think they should either hold here or cut, but does not see base case as involving a rate hike. I'm just being asked here about the SEPs on unemployment rate and why there's confidence the unemployment rate will not be rising too much anymore. He does note, given where rates are now and it is plausible it is within a neutral rate, he says it should enable labour markets to stabilise or tick up only 1 or 2 more tenths.
Order filled.
And Powell just being asked about his analogy he gave in October about a foggy situation, you slow down. He says in October, he said there was no certainty of December rate cut, and that was indeed correct. And just regarding why they moved today, he does note it is due to gradual cooling in the labour market.
Order filled. Order filled.
And Powell notes they think there's negative 20,000 in payrolls per month. Powell says they think there's negative 20,000 in payrolls per month. And just further on the labour market, does note labour market is cooling a touch more gradually than they thought, and inflation has come in a touch lower.
Order filled.
And now just speaking on inflation, says evidence is growing that services inflation has come down and goods inflation is entirely due to tariffs. And just regarding the broader economy, Powell notes it doesn't feel like a hot economy.
Order filled. Order filled. Order filled.
And just quickly breaking away from Powell, Intel exec does note the company is hoping to get Nvidia investment done either later this year or early next year. And a bit further from Powell does note they got to ample reserves a little faster than they thought they would. And Powell notes April 15th is coming up and they want ample reserves even on tax day. And just further on the balance sheet, does note the seasonal build-up was going to happen anyway, plus there's secular growth in the balance sheet. And adds the reserves seem to be constant versus the whole economy. And Powell adds the front loading of next few months of purchases to get through tax season. And And he is just being asked about the Supreme Court case on Fed Governor Cook. He says he won't address it here. And Powell is just continuing to highlight the unique situation with their mandate. He does note with the tension between their two goals, it is a unique situation. Just continuing to reiterate the tension there is between both sides of the mandate. And Powell adds, when both goals are equally at risk, they should be at neutral. And just on January, Powell notes haven't made a decision on that. And Powell's been asked about tariffs. He does say if there are no newer tariff announcements, inflation from goods should peak in Q1. I'll just put a caveat with that. He does note that he won't be able to predict it with exact precision, and no one is. And Powell notes from here the peak should be a couple of tenths higher or less on inflation, and after that should see it come down in the back half of next year. And does note, Powell, inflation compensation in markets at a very comfortable levels past the very short term. And Powell, as there's nothing happening in long rates that suggests concerns about inflation in the long run. And Powell adds the rise in long rates may be due to expectations for higher growth. And just making you aware, PAL notes, they hear loud and clear how people are experiencing higher costs. And PAL just further adds they'll need to have some years where wages outpace inflation for people to feel good about affordability. And just from Trump here, does note they just seized a tanker near Venezuela. That is in fitting with reports we did have, but just Trump now noting they just seized a tanker near Venezuela. Note we did have reports about that. Just Trump seemingly confirming that, and as such, just have seen immediate knee-jerk higher in WTI and Brent. And back to PAL now, just speaking on the 2% inflation target, does note they will deliver that, and everyone should understand they will. And just continue to speak on the labour market, does note has significant downside risks. And PAL notes, if you get away from tariff inflation, it is in the low twos. And once again, PAL does reiterate that tariffs are likely to be one-time price increases. And PAL notes, if didn't have to worry about the labour market, policy rate would be higher. So they didn't have to worry about the labour market, the policy rate would be higher. And PAL does note, it is not
Order
controversial
filled.
that job growth estimates in real time are difficult and there's been a systematic overshoot. And further from Powell, he does not need to watch carefully a situation where job creation is negative and don't want to push down on job creation with their policy.
Order
And
filled.
just making as we continue through the Powell presser, continue to see downside in the dollar index here. As such, dollar yen that does continue lower, was around roughly 156.70. It now resides beneath 156. It's also echoed in euro dollar. That is residing around session highs, just touching 117 to the upside from area lows around 116.25.
Order filled. Order filled.
And Powell's just currently speaking about AI. He does note right now it's such early days and not showing up in layoffs as of yet. He's just being asked about why the range of views is so different between governors and presidents. He does note the views are varied among governors and among presidents, and there are people on both sides in both groups of policymakers. And Powell's just currently asked about the revised upwards GDP growth forecast for next year. If the Supreme Court does strike down Trump's tariffs, he does reply with, he simply doesn't know. There are so many things to consider.
Order filled. Order filled. Order filled. Order filled. Order filled. Order filled.
And just Pal once again speak about the housing market. It does note it does face significant challenges. And just regarding that, he does note whether a 25 basis point cut will make much of a difference on a housing affordability. And Powell notes have not built enough housing for a while.
Order filled.
And now just speaking on inflation, Powell notes the risk of inflation is pretty clear to see. And just once again, talking about the tariff risk, it says they expect, or at least most of them, that inflation will be a one-time price hike, but the risk that it's not. He says there is of course a risk that tariff inflation continues to be more and more persistent. And Powell's note is less likely possibility is that the labour market gets tight and boosts inflation, and not particularly likely. And echoing familiar remarks here, Powell notes policymakers see the picture similarly, but the risks differently. When questioned if they're seeing a positive productivity shock, says yes. And seeing some commentary here from Bank of America CEO Moynihan, he says Q4 markets revenue will be up high single digits, close to 10%. And now Powell just asked him whether he will stay on the Fed board after his chair term ends in May. He says he has nothing new to say on that. Powell does echo what he has said through a duration of this press conference, that policy rate is in a range of neutral. A bit further from Bank of America CEO does expect Q4 investment banking fees to be broadly flat. And just making you aware, Chair Powell's press conference has now concluded. Just recapping some of his main remarks, of course, we covered it extensively and they are all available on the headline feed, but just going over some of the main ones. Of course, overall it was a net dovish press conference, as we can see from the reaction across markets, particularly when compared to the tone of the October one. Powell did appear more concerned about the labour market side of the mandate than inflation, and he did stress several times that there are downside risks to employment, while saying it is a reasonable base case that the tariff effects on inflation will be one time. Despite saying that, he was optimistic on growth, noting the baseline outlook would be solid growth next year as fiscal policy would be supportive. When asked about why they cut today after the October decision, he did note there has been a gradual cooling in the labour market. They think there is negative 20,000 payrolls per month, and inflation has come in a touch lower. While speaking on payrolls, he also suggested the overcount is around 60,000 per month, while labour supply has come down sharply. Do note, despite the dovish nature of this press conference, some hawkishness was seen, as Powell said they are well positioned to determine adjustments to the policy rate, noting that rates are now in a plausible range of neutral, later describing policy rates as at the high end of neutral.
further from the Bank of America CEO Moynihan expects Q4 investment banking fees to be broadly flat, and they don't see indications of consumer financial stress. And do note commentary from US President Trump says that growth doesn't mean inflation, and if there is inflation, that's okay. We can slow it down, he says.
And just some further comments here from President Trump. He does note they don't see why they can't have 20 to 25% GDP growth. And further here from Trump does note if market goes up, we should encourage it to go up more. And of note for Intel INTC, it did pursue deals that boosted startups held by CEO Lip Bhutan's venture capital funds. And Intel explored bids of startups Revos, Sambanova, where Tan served as chairman. And further from Bank of America CEO Moynihan, it does note they will buy back more stock. Of note for AIG and Chubb CB, according to Insurance Insider, Chubb made informal takeover approach for AIG, but when approached for a comment, Trump denies that it submitted an offer for AIG. And just Trump speaking on the Venezuela vessel does not, it was seized for a very good reason. And Trump, just speaking on geopolitical footing, on the Ukrainian call with European leaders, says they discussed in pretty strong words Just over here from Trump on Ukraine said they would like to go to a meeting in Europe on the weekend. And Trump says they'll make a determination based on what Ukraine come back with. And just seeing Trader Tech latest market imbalance, that's roughly 1 billion to sell, 1 billion to sell. And further from Trump on Ukraine, does note meeting with Zelensky in US is what is being requested.
Order filled. Order filled.
And just potential note for Warner Bros. Discovery, WBD, says, I think CNN should be sold. And just making sure we do have a couple of earnings after hours today we'll look out for, namely Oracle and Adobe. They are both due at 5 minutes past the hour. For Oracle, EPS expect of 163 and revenue of 16.18 billion, and Adobe EPS expect of 538 and revenue of 6.1 billion.
Order filled. Order filled.
Just seeing a comment here from President Trump. He does note he is meeting with Kevin Walsh today. Trump says he is meeting with Kevin Walsh today.
Order filled.
Not got any further context to this, but just making you aware, Trump does say he is meeting with Walsh today. And just in terms of context, that of course we are still waiting the new Fed president that Trump will pick after Powell, and Hassett is the big favourite, but just making you aware of that comment from Trump. Just further from Trump on the Fed, he does know rate should be the lowest.